And hopefully, my program is actually working. I don't think it actually is, because it's giving me some bullshit flow on my reading here. And yeah, so we'll find out. We'll find out if it's working or not. I don't think it is, but hopefully it is. Hopefully. In any case, I did have some goofy shit on my starting today, so I am going to go ahead and just throw it immediately down to music, and we'll go from there. And hopefully, like I said, hopefully this is not a real big issue, and I'll be able to resolve it. Of course, if there is in fact an issue. I think there is, not entirely sure. So, let's go ahead and go with some body count. And we'll start with Talk Shit, Get Shot here on Coin Metal. And that was Powerman 5000 with Operate Annihilate. And this may be functioning, it may be not functioning. I don't know. I don't care. I'm just going to do it like I normally do. And yeah, that's how we're going to do it. Anyways, as far as what we're going to get into today, I came across this thing. And, we've been talking about legislation with regard to cryptocurrencies pretty much this entire show. Like from the first one. And as a matter of fact, I did a full reading of what the fuck? Alright. Anyway, I did a full reading of BitLicense. And I don't know if you guys are aware of BitLicense or not, but it was the first real legislation concerning regulating cryptocurrencies here in the United States. And specifically, it made pretty much anybody who wanted to do anything with regard to being a vendor or being a facilitator or anything like that, they had to apply to the NYDFS for this BitLicense. And just to apply for it, you had to pay $20,000 non-refundable application fee. So you can tell right off the bat, this is not something meant to make you safer. It is meant to kick you the fuck out. And that's pretty much what the effect was in New York. That a great number of entrepreneurs who were generating all kinds of income that they were not generating the previous year suddenly were considered to be criminals because they were not licensed with the NYDFS to jerk off with their left hand or whatever. I don't know. Anyway, so there's been this push, to kind of regulate you out of finance. Keep you as an end user in all of this. And I'll be really honest, that's never going to happen. The fact of the matter is that it doesn't matter what kind of legislation they write. Google can't keep fucking malware out of their own marketplace. Apple can't keep the same thing out of their own fucking marketplace. So what does that tell you? It tells you that there is no safety to regulate you from, and that the abuses that you're seeing are most likely legitimate according to somebody. Not necessarily you. Anyway, I gotta respond to something really quick here. Bullshit on this. On what? Yeah, anyway. And I only did that because he's a rolling ninja too. And from the looks of it, it looks like he might have had his account bumped or something. I don't know. It's kind of weird. It looks like it's the first time that he's actually messaged me on Facebook. But yeah. Anyway, get back to what we're doing here. So yeah, I came across this legislation proposal, And I want to cover that. If I can just find the damn thing. Ooh, that was something I meant to do. I found out recently that one of my very old, very, very favorite tackle shops, although I think he hated my guts, Just Fishing by Pete. Really, 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 really knowledgeable fisherman. And I mean, back when I lived in California, he was probably as good as I am now. Maybe not quite as good, but yeah, you know. Well, I'm allowing him a lot of latitude because man went up to the mountains to catch him a golden trout, and he framed it. Not framed it, but I mean, had it stuffed and put it on the wall. Anyway, I found out that he set up shop. It's funny. I used to have to ride from my house all the way over to Hermosa Beach. It's about 5 miles away. Anytime that I wanted to get any tackle or anything, and this is like from when I was 14 to till pretty much until I left. I mean, I think I was driving like the last couple years, but for the most part, I rode my bike everywhere. I mean, it was just convenient that way. Anyway, but Pete, he was this really, really, really knowledgeable guy when it came to fishing where I was down there in California. And it turns out he moved from the spot he was at for like, I don't know, like 20 something years out in Hermosa to less than like, I want to say less than a half a mile away from my old house. It's like, you bastard. You know, and another thing I found out, and this is just completely off subject, but I found out that where there used to be a McDonald's, there's now a Gracie Dojo. And the McDonald's was like, again, maybe a quarter of a mile away from my house. And so, yeah, it's fucking weird. You know, I moved 900 miles away, and everything that I was interested in is less than a mile away from my old house. Or moved to less than a mile away from my old house. It's like, you fuckers. Anyway, I'm trying to find this legislation in here because I think it's pretty fucked. Oh, here we go. Now, you guys know that I hate not altcoins, stable coins. I think that they're basically counterfeit fiat, and they allow for slippage on the exchange rate between US dollars and Bitcoin. And when I say slippage, I mean like in the exchange back and forth, they're able to gank some of the relative value, the monetary value of Bitcoin by issuing them. Anyway, so I got this thing here. It's on CoinDesk. U.S. lawmakers introduce bill that would require stablecoin issuers to obtain bank charters. Now, we have talked about this multiple fucking times on this show. And as a matter of fact, I'm pretty sure I've got it up on my YouTube channel. Let me bring that up and I can tell you exactly which episode it was. YouTube, you can do it on my channel. Fucking shit. Anyway, I can tell you which one it was for reference. And let's see here. And BTC value proposition, shilling screen doors for staking your own bones. No, it does not look as though I've uploaded it yet. Gosh, I hope I had one episode last week that was kind of fucked. And I've been noticing that's been happening. It makes me wonder if I got like somebody hacking my machine and like deleting episodes before I have a chance to finish them or something. I don't know. I know that's like way out there Alex Jones shit, but I don't know. You never can tell. Anyway, I did an episode where I was talking about Ernst & Young. And Ernst & Young is like this auditor agency. Okay, they audit the fitness of your business so that they can make recommendations for things like, you know, if you're trying to apply for any kind of loans or anything like that, the people providing your financiers, your potential financiers, will be looking at your books to evaluate. It's like, well, what the fuck are you? How much are you worth? How much collateral do you have? What's the likelihood that you're ever going to pay us off? Just they assess your fitness. Well, to make things easy on those financiers, rather than making them go through all that bullshit, there are entities like Ernst & Young, and they evaluate your shit. And they give you a seal of approval or disapproval or whatever. And entities, financiers and investors, such as yourself, evaluate the solvency of their investments or potential investments based on what Ernst & Young tells them or in these reports. Well, it's my feeling that Ernst & Young, if you watch The Big Short, there were entities that did the same thing for housing loan places, like GMAC and so on. I'm not really 100% on all the background there, but again, if you were to go back and watch The Big Short, they really explain it in depth. And if I go back and watch it, I could probably come back here and tell you exactly the nuts and bolts of it down to the bit. But basically, it was that there were these agencies, and I believe Moody's was one of them for the housing collapse, where they were evaluating entities and giving them AAA ratings. Whereas if anybody had really examined their books, they would see that they were completely insolvent and probably closer to F rating. And so, everybody went along investing in these pools of money that were going to these entities that were Fs, being rated at AAA. And nobody knew until the very end that until they started getting federally audited, basically, that they were completely fucked. And one of the things that made this even possible, to the extent that it grew to, was the repealing of Glass-Steagall. And when they did that, they eliminated the barrier between investment funds and savings funds. So it's like, the bank, they have liquidity available to them. They have it in the form of whatever deposits that you make, and then whatever assets that you're making for investments. So like if you're investing in Goldman Sachs or some CDs or some shit like that, that's a long-term savings, right? When you start commingling that with what they had liquidity-wise to do their own gambling, they're gambling with your money, basically. And that's one of the reasons why things got as fucked up as they did. But like Glass-Steagall was like this barrier where it's like this, no, banks. You cannot use people's fucking savings and people's investments in the same bit that you're collateralizing for housing loans and other shit like that. That's what they do normally, but there's like some sort of separation there where they wouldn't allow it for, I think it was savings funds, or again, it's like investment funds. If it's already in like a CD or something like that, you're investing in whatever the bank's going to invest in, and if it makes a return, you make a return, so on and so forth. But these are like long-term investments. They're not the same thing as your savings, and if you're dumping your money in your savings and the bank is using that as the same collateral as they have in this investment fund that they're doing shady deals and whatnot with, that's bad. Or at least it was bad under Glass-Steagall. And they had to do that because of, I think it was the savings and loans crisis. They put it in the Glass-Steagall, and then they took it away, and then the fucking housing loan crisis happened. Well, they have done some improvement as far as how they evaluate banks and whatnot, but I think that we're starting to see where there are these entities that are doing audits in the crypto sphere of companies that are involved in shit, and they're going to be making those ratings, whether it's an F or a B or AAA, and one of them is Ernst & Young. Anyway, so we've been seeing where the OCC has been letting up like the qualifications for becoming a charter bank, and they had to fight with the NYDFS over this. As a matter of fact, the U.S. Treasury had to take the NYDFS to court to assert that they have the ability to license charter banks. And so you kind of see here that this is not a single phase thing, okay? They're putting this through very, very slowly. And so personally, I believe that this is how they are going to collapse the dollar. This is how they are going to destroy the global economy, and this is how they are going to infect cryptocurrencies along with it, or at least the ones that are out there circulating right now. And I think Bitcoin, it has attributes that will keep it immune from a lot of this shit, and it's because it's proof of work. You had to do the work in order for it to happen. As long as it's a proof of work network, I think that aspect of it will remain viable. But whether or not the public is going to trust it as money is going to be a whole different thing. And see, I think this is trying to establish the basis for doubt in the public's ability to create cryptocurrencies. And this is a problem with it, with that idea, is that we've been operating for about 10 years now. 10 years of continuous uptime without really any fucking federal involvement at all. And it's only been the last couple of years that there have been any state interdictions in our actions and our behaviors and our investments. And so, the idea that government really makes a difference to the positive in cryptocurrencies is no. It's only gotten worse. The more they've involved themselves, the worse it's gotten. I mean, like DeFi, there isn't any reason at all why there's anything in DeFi that is worth more than Bitcoin. I mean, other than, it's what people are willing to throw at it or whatever, but fucking people are crazy out there. Anyway, so let's get into this article here. It's on Coindesk.com. U.S. lawmakers introduce bill that would require stablecoin issuers to obtain bank charters. Yeah, they made business for themselves by opening it up with the NYDFS, and now that it's time to cash in. And this is authored on December 2nd, 2020 at 2:37 p.m. PST. And it's by Nicholas D. So yes, penis. A new U.S. congressional bill would require stablecoin issuers to secure bank charters and secure regulatory approval prior to circulating any stablecoins. Like that's ever going to happen. Let's see here. U.S. Representatives Rashida Tlaib, Democrat Michigan, Jesus Chewy Garcia, Democrat Illinois, and Stephen Lynch, Democrat Massachusetts, introduced the Stablecoin Tethering and Bank Licensing Enforcement Stable Act on Wednesday, writing in a press release that it would focus on regulating stablecoins, naming the stablecoin of Facebook-led Libra project, since renamed Diem, as one example. Yeah, it's never going to happen. Quote, digital currencies whose value is permanently pegged or stabilized against a conventional currency like the dollar pose new regulatory challenges while also representing a growing source of the market liquidity and credit risk, the press release said. The 18-page bill would specifically require stablecoin issuers to obtain a banking charter, require approval from the Federal Reserve, Federal Deposit Insurance Corporation, and bank regulator to issue a stablecoin, require those same entities to conduct an ongoing analysis of any systemic risk, and require issuers to have FDIC insurance or maintain reserves for easy conversion back into US dollars. This would apply to stablecoins pegged to other national or state currencies, the bill said. Rohan Gray, an assistant professor at the Willamette University College of Law, told CoinDesk that the bill is really defining what a deposit is as far as digital assets are concerned. In his view, stablecoins are effectively an internet-native form of a deposit. No, they're just counterfeit fiat. Quote, any entity that wants to issue something that walks and talks like money or make a deposit should be regulated like a depository institution, he said. The press release also mentioned a letter that the sponsors and co-sponsors had previously sent to acting comptroller of the currency, Brian Brooks, that questioned the regulator's focus on the digital asset space. Specifically, lawmakers took issue with OCC interpretive letters on banks providing custody services to stablecoin issuers and other crypto platforms. Impact. The bill is designed to protect individuals, Representative Tlaib said on Twitter and in the press release. In a tweet, she wrote, quote, preventing cryptocurrency providers from repeating the crimes against low and moderate income residents of color traditional big banks is critically important. Fuck you! Sorry. I mean, I hate to be so crass, as she appears to be speaking on behalf of middle and low income blacks, but she's full of shit. The only reason why we are not seeing more people of color in cryptocurrencies is only because they have not decided to involve themselves yet. There is nothing in code, there is nothing in cryptocurrencies that prevents anybody, regardless of their genitalia, regardless of what they do with their genitalia, regardless of the color of their skin, regardless of their nationality, regardless of their geographic location, regardless of their age, to involve themselves as they will. And this idea that there's anything that borders low and middle income people of color out of cryptocurrency is absolutely fucking insane. It's fucking insane. Continuing. A number of stablecoin issuers currently operate in the U.S. without banking charters, including Center Consortium, which are composed of Circle and Coinbase. Who really gives a shit? Circle is fucking Goldman Sachs. Gemini, which is also Goldman Sachs, and JP Morgan. And Paxos, algorithmic stablecoins like DAI, would also appear to fall under this bill. Yeah, good luck with that. Good luck trying to enforce any kind of regulation, and specifically because DAI is mostly circulated in DeFi, which is not a they tend not to be any regulated or licensed entities operating in that aspect of crypto. Circle CEO Jeremy Allaire said the bill, quote, would represent a huge step backwards by limiting industry innovation. You know what he's really worried about? He's really worried about some federal auditor coming along and figuring out that all of the money that is collateralized for USDC is from elsewhere in Goldman Sachs' books, i.e. it is your money that they are using as collateral for issuing USDC out into the market. Continuing on, quote, an enormous amount of the innovation brought to the underbanked and small businesses has been driven by non-bank fintech companies and forcing crypto, fintech, and blockchain companies into the enormous regulatory burdens of the Federal Reserve and FDIC regulation and supervision is inconsistent with the goals of supporting innovation in the fair and inclusive delivery of payments that comes from stablecoins, he said in a statement emailed to CoinDesk. You know what, dude? Really? If you gave that much a shit about it, why do you keep applying for your fucking bit license? Why don't you tell New York to go fuck themselves? They kicked all the fucking people of color out of cryptocurrency if they didn't already work for Goldman Sachs or JP Morgan or some other fucking entity like that. Continuing on. More effective ways to regulate stablecoins could come from new charters or other types of supervision, he said. In a statement, Blockchain Association Executive Director Kristen Smith opposed the bill, saying, quote, "While we have had sustained and constructive discussions with Representative Tlaib's office on the issue, we disagree with the perspective of this legislation and oppose this bill. It would strengthen the position of the most powerful financial institutions while overlooking two core promises of decentralized networks: the chance to put more power in the hands of individual consumers and to catalyze innovation across payments and other financial services." Goddamn right. Smith said the OCC's guidance around stablecoins was a, quote, progressive example of how these tokens could be regulated in the U.S. The current congressional session will end in just a few weeks, but Gray said the bill is likely to be reintroduced early next year. Quote, "Often there is a tendency to react in the moment to technological changes or innovation by saying, quote, stop, don't do that. And what this bill is trying to do is preserve this in a forward-looking way," he said. Yeah. So, we are going to read the legislation. Or, if we can find it, let's see. Like other shadow money investors in the past. Here we go. Stablecoin tethering and blah, blah, blah. And so this is the discussion draft. So they will revise this multiple times. And this is by Ms. Tlaib. A bill to amend the Federal Deposit Insurance Act to provide for the classification and regulation of stablecoins and for other purposes, i.e. to kick people of color out of fintech. Be it enacted by the Senate and House of Representatives of the United States of America in Congress assembled. Section 1, short title. This act may be cited as Stablecoin Classification and Regulation Act of 2020. Bunch of fucking bullshit. Yeah, you know what? Let's go ahead and hold off on diving into it. It's only 18 pages and it looks like relatively large text. So I think we'll be able to breeze through this, disseminate it, and destroy it all in one fell swoop on the other side of the music break. So let's go ahead and launch into music. We'll do it for a short period of time, then we will come back. But as far as where we're going to go with music, though, that's really the question. And I think this one is really appropriate given what we're about to do. So let's go with this. Machine Head, Clenching the Fist of Dissent, here on Coin Metal. And that was Hex by Cavalier Conspiracy. And so, as far as what we're going to get into next, as promised on the other side of the music break, we are going to read this bad boy here. And just for a refresher, introduce legislation protecting consumers from cryptocurrency-related financial threats. And this is the press release for it, but I accidentally clicked on the wrong thing here. It's a bill to amend the Federal Deposit Insurance Act to provide for the classification and regulation of stablecoins, and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America in Congress assembled. Section 1. Short title. This act may be cited as Stablecoin Classification and Regulation Act of 2020. Section 2. Findings. Congress finds the following. Number 1. Article 1, Section 8, Clause 5 of the United States Constitution provides that Congress shall have the power to coin money, regulate the value thereof and of foreign coin, and fix the standard of weights and measurements, or measures rather. Number 2, Section 2A of the Federal Reserve Act, 12 U.S.C. 225A, provides that the mandate of the Board of Governors of the Federal Reserve System is to, quote, promote effectively the goals of maximum employment, stable prices, and moderate long-term interest rates. Number 3, Section 21A of the Banking Act of 1933, 12 U.S.C. 378A, provides that, in part, that A, after the expiration of 1 year, June 16, 1933, it shall be unlawful. 2, for any person, firm, corporation, association, business trust, or other similar organization to engage to any extent whatever with others than his or its officers, agents, or employees in the business of receiving deposits subject to check or to the repayment upon presentation of a passbook, certificate of deposit, or other evidence of debt, or upon request of the depositor, unless such person, firm, corporation, association, business trust, or other similar organization, A, shall be incorporated under and authorized to engage in such business by the laws of the United States or of any state, territory, or district, and subject by the laws of the United States or of the state, territory, or district wherein located, to examination and regulation, or B, shall be permitted by the United States or any state, territory, or district to engage in such business, and shall be subject by the laws of the United States or such state, territory, or district to examination and regulations, or C, shall submit to periodic examination by the banking authority of the state, territory, or district where such business is carried on, and shall make and publish periodic reports of its condition, exhibiting in detail its resources and liabilities, such examination and reports to be made and published at the same times and in the same manner and under the same conditions as required by law of such state, territory, district in the case of incorporating banking institutions engaged in such business in the same locality. Number 4, Section 3 of the Federal Deposit Insurance Act, 12 U.S.C. 18131, provides that under the Federal Deposit Insurance Act, the term deposit means 1. The unpaid balance of money or its equivalent received or held by a bank or savings association in the usual course of business and for which it has given or is obligated to give credit, either conditionally or unconditionally, to a commercial, checking, savings, time, or thrift account, or which is evidenced by its certificate of deposit, thrift certificate, investment certificate, certificate of indebtedness, or other similar name, or a check or a draft drawn against a deposit amount and certified by the bank or savings association, or a letter of credit, or a traveler's check on which the bank or savings association is primarily liable, provided that without limiting the generality of the term money or its equivalent, any such account or instrument must be regarded as evidencing the receipt of an equivalent of money when credited or issued in exchange for checks or drafts, or for promissory note, upon which the person obtaining any such credit or instrument is primarily or secondarily liable, or for a charge against a deposit account or in settlement of checks, drafts, or other instruments forwarded to such bank or savings association for collection. Number 2, trust funds, as defined in this act, received or held by such bank or savings association, whether held in the trust department or held or deposited in any other department of such bank or savings association. Number 3, money received or held by a bank or a savings association, or the credit given for money or its equivalent received or held by a bank or savings association in the usual course of business for the special or specified purpose, regardless of the legal relationship thereby established, including without being limited to escrow funds, funds held as security for an obligation due to the bank or savings association or others, including funds held as dealer reserves, or for securities loaned by the bank or savings association, funds deposited by the debtor to meet maturing obligations, funds deposited as advance payment on subscriptions to United States government securities, funds held to meet its acceptances or letters of credit, and withheld taxes, provided that there shall not be included funds which are received by the bank or savings association for immediate application to the reduction of an indebtedness to the receiving bank or savings association, or under condition that the receipt thereof immediately reduces or extinguishes such an indebtedness. 4. Outstanding draft, including advice or authorization to charge a bank's or savings association's balance in another bank or saving association's cashier check, money order, or other officer's check issued in the usual course of business for any purpose, including, without being limited to, those issued in payment for services, dividends, or purchases, and 5. Such other obligations of a bank or savings association as the board of directors, after consultation with the comptroller of the currency and the board of governors of the Federal Reserve System, shall find and prescribe by regulation to be deposit liabilities by general usage, except that the following shall not be a deposit for any of the purposes of this act, or be included as part of the total deposits or of an insured deposit. A. Any obligation of a depository institution which is carried on the books and records of an office, such as or of such bank or savings association located outside any state, unless such obligation would be a deposit if it were carried on the books and records of the depository institution, and would be payable at an office located in any state, and the contract evidencing the obligation the obligation provides by express terms and not by implication for payment at an office of the depository institution located in any state. B. Any international banking facility deposit, including an international banking facility time deposit, as such term is from time to time defined by the Board of Governors of the Federal Reserve System in Regulation D, or any successor regulation issued by the Board of Governors of the Federal Reserve System, and C. Any liability of an insured depository institution that arises under annuity contract, the income of which is tax deferred under Section 72 of the Internal Revenue Code of 1986. Section 1A of the Federal Deposit Insurance Act, 12 U.S.C. 1811A, provides that the Federal Deposit Insurance Corporation was established for the purpose of insuring the deposits of all banks which are entitled to the benefits of insurance under the Federal Deposit Insurance Act. In other words, they put everybody on the hook for their loss of assets. Section 3, regulation of stable coins. This is the meat of it. This is what we were trying to get to here. A, definitions. Section 3 of the Federal Deposit Insurance Act, 12 U.S.C. 1813 is amended. Number 1, in subsection 1, A, in paragraph 4 by striking and at the end, and B, by redesignating the paragraph 5 as paragraph 6, and C, by inserting after paragraph 4 the following: stable coins issued by such bank or savings association. They want the FDIC to cover stable coins issued by a fucking bank. Oh god, this is fucking hilarious. They're authorizing every bank to become the Federal Reserve and issue their own stable coins. At least that's how I read that. Number 2, by adding at the end the following definitions related to stable coins. Stablecoin. The term stablecoin means any cryptocurrency or other privately issued digital financial instrument that A, is directly or indirectly distributed to investors, financial institutions, or the general public, or B, is denominated in U.S. dollars or pegged to the United States dollar, or denominated in or pegged to another national or state currency, and C, is issued with a fixed nominal redemption value with the intent of establishing a reasonable expectation or belief among the general public that the instrument will retain a nominal redemption value that is so stable as to render the nominal redemption value effectively fixed, or in such a manner that, regardless of intent, has the effect of creating a reasonable expectation or belief among the general public that the instrument will retain a nominal redemption value that is so stable as to render the nominal redemption value effectively fixed. In other words, it's $1 because we say it's worth $1. 2, nominal redemption value. A, in general, with respect to a stablecoin, the term nominal redemption value means the value at which the stablecoin can readily be converted into United States dollars or any other national or state currency, or a functional monetary equivalent on demand at the time of issuance, or otherwise accepted in payment, or to satisfy debts denominated in United States dollars or any other national or state currency. B, treatment of instruments pegged to the United States dollar. Oh my god. This one's going to be interesting. For purposes of subparagraph A, the value at which a stablecoin that is pegged to the United States dollar or a functional monetary equivalent can readily be converted into United States dollars on demand at the time of issuance shall be calculated using the express or implied peg rate for such conversion at the time of issuance. That doesn't seem very interesting. For purposes of subparagraph A, the value at which a stablecoin that is pegged to the United States dollar or other functional monetary equivalent can... There's a functional monetary equivalent to the United States dollar? a stablecoin that is pegged to the United States dollar or a functional monetary equivalent. I wonder what they're talking about there. I mean, let's be clear here. Are we talking about the fact that there are functional monetary equivalents to you? So let's say that you have $1 worth of gold. And now, to be clear here, there is the word dollar has a legal definition. It's a weight of gold. Okay, it has a legal definition. If you were to look it up, it has a legal definition. What you're circulating in your pocket is not a United States dollar. It's valued as a United States dollar. It is a proxy for a United States dollar, but it is not a United States dollar. It is in fact a Federal Reserve note, which is an IOU for a United States dollar issued by the Federal Reserve. Okay, do not mistake that. And so what they're talking about here with the fucking functional monetary equivalent, they're probably talking about weight of gold, because at some point or another there's going to be some sort of association with that. Like maybe if you do have silver or gold, physical silver or gold, that you could take to a bank and say, hey, yo, I want this to act as collateral for my stablecoin. And so I want you to recognize it as such. And I think that under this kind of legislation, it's kind of like opening the door for a bank to be able to issue a stablecoin against your volumes of gold that they've got, that they're custodying for you. Now, whether or not that's a good or bad thing, I gotta wonder. And no, there will be no product mention on this show. I just drink stuff. Anyway, continuing on. And unless maybe, I don't know, sometime if they decide they want to pay me for that kind of thing. United States dollar or functional monetary equivalent can readily be converted into the United States dollar on demand at the time of issuance shall be calculated using the express or implied peg rate for a conversion at the time of issuance. C. Treatment of instruments denominated in or pegged to another national or state currency. For purposes of subparagraph A, the value at which a stablecoin that is denominated in or pegged to another national or state currency or a functional monetary equivalent can readily be converted into United States dollars on demand. Oh, holy shit. At the time of issuance shall be calculated using the express or implied exchange rate for such conversion at the time of issuance. D. Functional monetary equivalent defined. Okay, I was hoping for that one. For the purposes of this act and any act enacted after the date of enactment of the subsection, the term, quote, functional monetary equivalent means deposits as defined under Section 3 of the Federal Deposit Insurance Act, e-money and money transmitter balances, other stablecoins, and any other financial instrument issued for the purpose of circulating as money, making payments, or satisfying debts denominated in United States dollars or any other national or state currency. Regulations. The Federal Deposit Insurance Act, 12 U.S.C. 1811, ET-SEC, is amended by adding at the end the following: stablecoins, issuing stablecoins, limitation on who may issue stablecoins. It shall be unlawful for any person to issue a stablecoin other than an insured depository institution that is a member of the Federal Reserve System. Go fuck yourself. 2. Limitation on stablecoin related commercial activities. It shall be unlawful for any person to issue a stablecoin or stablecoin related product, to provide any stablecoin related service, or otherwise engage in any stablecoin related commercial activity, including activity involving stablecoins issued by other persons, without obtaining written approval in advance and on an ongoing basis from the appropriate federal banking agency, the corporation, and the Board of Governors of the Federal Reserve System. Go fuck yourself. Number 3, notice and approval requirements. Any person issuing a stablecoin shall A, notify the appropriate federal banking agency, the corporation, and the Board of Governors of the Federal Reserve System, go fuck yourself, of the person's intent to issue the stablecoin at least 6 months prior to the date of issuance. Give me a fucking break. We can fucking issue a stablecoin this weekend. B, obtain written approval from the appropriate federal banking agency, the corporation, and the Board of Governors of the Federal Reserve System prior to issuing any stablecoin or stablecoin related product, providing any stablecoin related services, or otherwise engaging in any stablecoin related commercial activity, including activity involving stablecoins issued by other persons. And C, provide ongoing analysis to the Board of Governors of the Federal Reserve System, the Financial Stability Oversight Council, and the Office of Financial Research on any potential systemic impacts or monetary policy implications of the stablecoin. Give me a fucking break. 4, master account access. Oh God, this is going to get fun. With respect to an issued depository institution that is a member of the Federal Reserve System and that has obtained written approval, described under paragraph 3B, A, the Board of Governors of the Federal Reserve System shall provide the institution with a master account of the Federal Reserve System, and B, the institution shall be eligible to receive all benefits and access to services associated with such an account. Oh my God, maybe they'll be able to borrow credit or borrow money. B, requirement to maintain fixed value. Any issuer of a stablecoin shall take all possible actions to ensure that at no point over the life of the stablecoin, the redemption value of the stablecoin does not drop below the nominal redemption value of the stablecoin. The Federal Reserve Note can't even do that. C, ability to redeem stablecoins. In general, any issuer of stablecoins shall maintain the ability to immediately redeem outstanding stablecoins at their nominal redemption value. Oh, I lost a mark there here. Redemption value. In general, any issuer of stablecoins shall deposit reserves. No, I'm off. Yeah, here we go. In general, any issuer of stablecoins shall maintain the ability to immediately redeem all outstanding stablecoins at their nominal redemption value upon demand in United States dollars. Number 2, requirement to maintain collateral for uninsured stablecoin amounts. A, in general, any issuer of stablecoins shall deposit reserves with the applicable Federal Reserve Bank in a segregated account in an amount equal to the nominal redemption value of all outstanding stablecoins issued by the issuer, and such reserves shall serve as collateral for such stablecoins. B, exception for insured deposits. Subparagraph A shall not apply with respect to the value of any existing stablecoins that the issuer of the stablecoins knows are insured deposits. That's interesting. If I think it's an insured deposit, and I think I know that it's an insured deposit, maybe it's an insured deposit after all. Penalties. If the issuer of a stablecoin fails to immediately redeem an outstanding stablecoin upon demand in United States dollars, or if the appropriate federal banking agency determines that the issuer does not have the ability to immediately redeem all outstanding stablecoins upon demand in United States dollars, the appropriate federal banking agency shall penalize the issuer, which may include A, the revocation of deposit insurance provided under this act, B, the revocation of the issuer's membership in the Federal Reserve System, C, the revocation of the issuer's federal charter, and D, such lesser penalty as the agency determines appropriate. And I guess that's like subsection D. Products and services related to stablecoins. Number 1, disclosures. Any person offering or providing a product or service with respect to a stablecoin, regardless of whether such person is the issuer of the stablecoin, shall clearly disclose A, whether the person is the original issuer of the stablecoin, and B, if the person is the original issuer of the stablecoin, whether the stablecoin is being held as an insured deposit or the stablecoin is fully collateralized by reserves maintained at a Federal Reserve Bank. Use the term dollar. A person offering or providing a product or service with respect to a stablecoin may not use the term dollar or dollars to refer to stablecoin balances unless such reference is pre-approved by either the comptroller of the currency or the board of governors of the Federal Reserve System. Prioritization under deposit insurance. With respect to a depositor, for purposes of determining whether a deposit is an insured deposit, the corporation shall first include deposits that are not stablecoins. I.e., you have to provide actual collateral. Oversight by the federal banking agencies. In general, the appropriate federal banking agency shall have general regulatory authority over an insured depository institution's business activities related to stablecoins, including all existing regulatory powers that the agency has with respect to the institution's business activities related to other deposits. Number 2, capital adequacy rules. The federal banking agencies shall promulgate rules and standards regarding the capital adequacy, leverage, liquidity, and permitted activities of stablecoin issuers and other persons engaged in stablecoin-related activities. Number 3, effect on other rules. To the extent a person is subject to capital adequacy, liquidity, and other rules issued under this section, the appropriate federal banking agency may provide exceptions or exemptions from similar rules issued pursuant to other provisions of law, if the agency determines that such exceptions or exemptions are appropriate, taking into account the activities of such a person. It's so because I says it's so. Rule of construction. Nothing in this section may be construed as removing any jurisdictional or regulatory authority of any federal agency. Under the Banking Act of 1933, Section 21 of the Banking Act of 1933, 12 U.S.C. 378 is amended in subsection A in paragraph 1 by inserting after, quote, to any extent whatever in the business of the following, quote, issuing stablecoins or, and B, in paragraph 2, by inserting, quote, officers, agents, or employees in the business of the following, issuing stablecoins or, number 2, by redesignating subsection B as subsection C, and 3, by inserting after subsection A the following. B, For purposes of subsection A, the term stablecoin has the meaning given that term under Section 3 of this Federal Deposit Insurance Act, 12 U.S.C. 1813. Rulemaking. Not later than the end of the 3-month period beginning on the date of enactment of this act, the Board of Governors of the Federal Reserve System, the Comptroller of the Currency, and the Federal Deposit Insurance Corporation shall issue rules to carry out this act and the amendments made by this act. Okay, so we managed to devour all 18 pages of this thing and laugh at it heartily and critique it and annotate it, and I'm not really impressed because it seems like this is giving additional leeway to banks to create what are effectively securities. See, I believe that the whole subject of stablecoins has been completely mishandled by the federal government. For one thing, unless they've never provided actual proof of their reserves. They've had multiple banking issues because they've tried to store money in U.S. banks, and U.S. banks won't let them because they recognize what they're doing. But in any case, there hasn't been an actual audit of IFINX's cash reserves. And so we have no idea whether the $15 billion worth of USDT out there are actually collateralized by US dollars. And that it is a major liability. I mean, I'm glad they're addressing stablecoins in general, but the fact of the matter is they don't have the authority or the ability to execute this. I mean, you and I could be creating fucking virtual stablecoins right now, and they have no idea. They have no fucking control. This idea that I'm going to let the Board of Governors of the Federal Reserve System review my petition to create a fucking stablecoin 6 months in advance. Give me a fucking break. 6 months. We've watched mountains raise and fall in 6 months in fucking crypto. Billions of dollars worth of fucking shit just fucking vanish. We've seen it. It's happened. And this idea that, you're going to be able to guarantee that your shit's going to stay stable no matter what. That you're going to maintain your parity with the US dollars regardless. And fuck you. Bunch of bullshit. This is basically saying you need us to hold your hand, don't you? And got a fucking gun to your head saying, don't you? And we don't, really. We don't. And more importantly, I think this kind of thing is going to stifle innovation. And what pisses me off the most is that you have a person of color presenting this bill on behalf of people of color. But the fact of the matter is this kind of legislation is going to impact one group more than anybody else. And you know who that is? People of color. So, I mean, I really don't know who she's trying to fucking help here, The fact of the matter is that we're separate from the Federal Deposit Insurance Corporation. We're separate from the Federal Reserve. However, here's the thing. All of the shit is already covered. If I issue a stable coin and I do not have the US dollars to back it up, I have just created counterfeit currency. And there are plenty of laws against creating currency that is counterfeit. See, the problem is that this shit is like 3 years after the creation of quote-unquote stable coins. And so because they didn't go after Goldman Sachs and they didn't go after JP Morgan and they didn't go after whoever bank it is that fucking runs and owns IFINX, because I guarantee it's one of the fucking Federal Reserve banks. because these entities have not been gone after, we can safely assume that this is just protectionism for fucking JP Morgan, Goldman Sachs, and whoever it is that really owns Ifinex. And kick all you little motherfuckers out. You can't issue stable coins anymore. You got to submit a draft proposal 6 months prior to you issuing fucking. Give me a fucking break. I watch kids spawn stable coins on the fly on balances of Ethereum. Just give me a fucking break. Anyway, so yeah, this gives you an idea of their thinking with regard to cryptocurrencies. They really have no fucking business trying to regulate shit in cryptocurrencies. Just manage your fucking Federal Reserve. If the Federal Reserve wants to put out a CBDC, put the fucking hammer on them. You know, I can tell you why Goldman Sachs and JP Morgan are against this kind of legislation. Because it'll prove that they are using their customers' savings accounts, their customers' fucking insurance accounts, as collateral for their fucking USDC and their fucking the other one out there. I can't remember what the other one is. Anyway, point being is they would be caught commingling customer funds, and so yeah, it's probably very unlikely that this thing will pass, and specifically for that reason. Everybody like money, including Congress people. Anyway, let's go ahead and throw back down with some music. And where to go? We chewed up a lot of really good stuff last time. But I know that we did not cover Death Clock. And so here we go. Awaken. Here on Coin Metal. And that was Vola with The Same War. And it is with that I'd like to bring this episode to a close. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, I'd like y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, we got plenty of time. So we got to find something good to put in there. And so I'm kind of scrolling down here. I had one picked out, but it's a little bit short. And I think maybe if I jog for another minute or two, maybe we can fit that one in. But I don't know. I'll keep looking until then. And kind of keep scrolling down here. Hollow movement, maybe. Yeah, we got enough time to do that. Here we go. The Contortionist, Hollow Movement, Last Dance. Here on Coin Metal. Thank you again for listening, and y'all have an excellent evening. Good night.